Well, but let's never forget there's so much in this space. It's one thing I've been, I think, adamant about is let's not underestimate the amount of people who can and will and have the ability to manipulate things for short-term profits, pump and dump, and make a killing, and then turn around and get out and say thank you. I mean, I've seen the pits. Now it's just okay. People can do it
Milk
electronically on a
futures,
global basis.
the milk futures in the pit back in the
There
day.
you go. I
When
mean,
when
to
are
be
they going
able
to
to,
open? Like there were larger bets on when it would open than the actual trading of the milk futures.
Cryptocurrency markets experienced a sudden surge in Bitcoin prices following a now-debunked report on a Bitcoin ETF approval by the U.S. Securities and Exchange Commission. The erroneous report initially propelled Bitcoin's value to the $30,000 mark. However, the momentum was short-lived as the digital currency's price soon plummeted to around $28,000, stirring volatility within the market. The now-deleted X post prompting this reaction came from the cryptocurrency news site Cointelegraph. It claimed that BlackRock's iShares division, dedicated to exchange-traded funds and had secured the SEC's approval for a pioneering Bitcoin spot ETF. The news spread like wildfire, triggering the market reaction that pushed Bitcoin prices to $30,000 within the hour. According to McGlone, this is a bad case of speculators jumping into the hopium and trading the rumors, and the effect this misinformation has on the real approval of the ETFs may be more devastating than expected. He comments on what could be the overall reaction by the SEC regarding this. Let us now hear what he had to say.
there's a lot of reasons I think Gary Gensler would take these exorbitant risks of going down in history, like Aaron Burr, because he knows, we all know, there is massive illegal speculation and tax things going on in this space. I mean, it's just front running. It's just guaranteed because they couldn't get caught. I mean, I've just seen it when it was illegal, but because you couldn't get caught. But when you can't get caught, and eventually you do, and we just know that, and we've seen it all. We've seen the pumps and dumps of things like Dogecoin and things, but that what's happening to me and now today is now I'm worried about. I just was watching the Bloomberg IB chat, and the guy says, "Yeah, cool. I had my hanging offer at 30,000 sold." I'm like, "Oh, perfect." I mean, that's one lesson you learn with clients. Always, if you're long or short and you got targets, always leave an offer in or a bid. And I'm afraid now that if this, say if it's kind of trickles down in the day, that's a pretty significant peak that might last a while.
The unconfirmed news quickly gained traction and was further propagated by coverage appearing in Reuters, among other outlets. This sequence of events led to a significant market reaction, prompting Bitcoin's price to briefly soar to the $30,000 mark. However, official confirmations from both the SEC and Nasdaq refuted these claims. BlackRock itself issued a statement clarifying that their proposed Bitcoin spot ETF was still under review by the SEC as reported by Blockworks. As this morning's events unfolded, it catalyzed a sharp rise in liquidations nearing a staggering $100 million. In June, BlackRock's iShares division, a giant in the fund management sector, submitted documents to the SEC proposing the establishment of a Bitcoin spot ETF. As detailed in the submission, the proposed entity, the iShares Bitcoin Trust, plans to primarily hold Bitcoin via a custodian representing the trust. The documents designate the cryptocurrency exchange Coinbase as the expected custodian. The approval of a Bitcoin spot ETF by the SEC could significantly augment mainstream acceptance of Bitcoin investing, increasing its accessibility to a broader investor base. While its status is still pending, BlackRock's decision to file for a Bitcoin spot ETF marks a critical juncture in the evolution of the cryptocurrency market. When the SEC does make its decision, it will undoubtedly have far-reaching implications for the market and could potentially shape the future of cryptocurrency investments. The recent Bitcoin price surge and subsequent fall, triggered by the now-debunked report, underscore the potential volatility in the cryptocurrency market. While the incident has highlighted the market's sensitivity to news about ETF advancements, it also serves as a reminder of the ongoing anticipation and speculation surrounding the approval of a Bitcoin spot ETF. As the SEC continues its review process, all eyes will be on this potentially game-changing development in the cryptocurrency market. According to McGlone, this may make it even harder to further cement the trust people have in the asset class, as the incident just showed how easy it is to manipulate the market. Some hours later after the whole incident, Cointelegraph released a report explaining what led to the dissemination of the false news. According to the report, which reads, "Dear Cointelegraph readers, we are incredibly grateful for the support and trust you have placed in our publication over the last 10 years. We strive to deliver the most thoughtful, engaging, and impactful news affecting the cryptocurrency space. Earlier today, during routine coverage, Cointelegraph's social media team posted a message on X without prior editorial approval stating that the United States Securities and Exchange Commission had approved BlackRock's iShares Spot Bitcoin Exchange Traded Fund, or ETF. This was false, the result of misinformation. The news lead originated from an unconfirmed screenshot posted by an X user who claimed it was from the Bloomberg terminal. Cointelegraph did not ultimately publish an article with this incorrect information, but we deeply regret posting this in error on X and the impact it has caused. An internal investigation revealed that our standard procedure for posting breaking news on social media, wherein sources are required to be verified before posting to social media, was not followed. Cointelegraph seems to be refitting claims of a possible market mover deal which some analysts on X had rumored to be the reason for the fake news. They accept it was a mistake on their part, but that mistake cost a whopping $105 million. This series of events in the crypto space still begs the question, who are the real bad actors in the crypto space? How far can the market manipulation go? If you have suggestions, questions, or comments, please don't hesitate to drop them in the comment section below. Also, don't forget to like this video, subscribe, and turn on notifications. Thanks for watching.